Hi, my name is David Warren. I'm a local Seattle real estate broker. Seattle is experiencing one of the hottest sellers markets in history. This is simply due to a low inventory level where we have a lot more demand for the people who are looking for homes than the homes that are available to purchase. And this is giving the sellers almost all of the negotiating power. Buyers are starting to realize that the marketplace is extremely competitive. Competitive so much that they're realizing that to purchase a home, it's almost more like an auction, that a seller's asking price is very much like an opening bid price. So what is a buyer to do? Well, obviously there's going to be a lot of escalation involved in purchasing a home. But my experience has been, or at least recently, that the top bidder isn't necessarily winning out and getting the house. That often a second or third really good offer, and especially you need to escalate, you're going to have to be up there in the top group, but you don't have to be the top bidder. But coming in with favorable terms to the seller can certainly improve your position over a bidder who's outbidding you by a few $1,000s or more. So that's what I want to talk to you today a little bit about. I've got a number of tips and ideas that that buyers that I've worked with over the last couple of years have used. Certainly you don't need to use all of them, but I think you should at least consider running through them and finding the ones that work best for you. So number one, be financially ready. And by this I mean have gone talk to a mortgage lender, get your loan pre-approval letter ready to go. This is, of course, assuming that you're going to mortgage the property and that you don't have all cash to do that. And it's very common for buyers to get very excited to get out and see a home. Maybe they found something online, they wouldn't looked at it in person over an open house. But in today's market, that just moves too fast. The seller isn't going to wait for you to get your lending set up and ready to go. They want to know basically when you present your offer that you have your loan pre-approval, that all this stuff is done. And homes today are selling very quickly. Most of them are gone in 5 to 7 days. And in today's loan pre-approval process, it's going to take a lot longer than that usually to get squared away. So my advice to you is, first of all, get your loan pre-approval process done. Get your letter ready to go so that when you find the right house, you have it available and you can jump on it and make the offer when you need to. Number two is loan type. We need to look at this from the seller's perspective, and the loan type that you're using certainly has different degrees of risk to the seller. An FHA and a VA loans run tighter conditions that can be called out on the appraisal process, so it might cause the seller a little more time and money having to repair something before closing that they can't necessarily get out of because it's a requirement of the loan. That may become unappealing to a seller if they, versus something if they just taken a traditional conventional loan. VA loans are also they require that the seller pay for part of the buyer's escrow fees at closing. So, if you want to improve your odds with the seller and help reduce their risk overall, my recommendation is to shoot for a traditional conventional loan over an FHA or VA loan. And there's certainly nothing wrong with those loan programs. This is only looking at it from the seller's perspective. Number three, shorten your loan approval process time. And what I mean by here is when you apply for your loan with your mortgage lender, you're talking to a loan originator, and they're going to do all sorts of financial things to make sure that basically, if you're saying what you say financially, that you're ready to go. When a loan is processed, and this is why it takes 30 to 45 days to close, your loan process has to go through an underwriting or go through the underwriter. Basically, they're going to double check everything. What I recommend doing is, before ever writing an offer, ask your loan originator to put your loan package through underwriting so that you're ready to go. They've basically dotted every I, they've crossed every T, they've looked over all your financials, all the way. All they're really basically is waiting for you to attach the loan to a specific property. And by doing this, you're going to greatly improve your odds with the seller. You basically say, Mr. Seller, I've gone all the way through. Even though I'm mortgaging the property, there's still a little bit of a risk there to you, but I've already done everything I need to do. There isn't much that they need to review for final loan process. And by doing that, I can probably close sooner. I can maybe close in 3 weeks or 2.5 weeks, depending on the lender, versus someone using a straight conventional or an FHA loan that might take 30 to 45 days to close who hasn't gone through this process yet. So again, ask your loan originator to run your loan through underwriting before you write an offer. Number 4, cash is king. If you have the ability to purchase a home all cash, you're going to be very, very favorable in the eyes of the seller, because this basically means you're going to come in with no financial contingency. So that's a huge, huge relief in the eyes of a seller. Now, naturally, not everybody has just a pile of cash sitting around they use to make an offer. But what I'm finding is a lot of buyers are doing is they're going out and they're talking to relatives, they're talking to friends, and they're piling in money and they're borrowing it from a variety of different sources and going out and making a purchase all cash, and then after the purchase coming back and then mortgaging the property and then using the proceeds from the mortgage to pay back all of the people they borrowed money from. So it's an option. If you have that option, you might consider doing that. Certainly, in the eyes of a seller, cash is going to be a lot more appealing than a mortgaged purchase. That doesn't necessarily mean that with cash you're going to get a discount. You're certainly going to have to compete financially, but it's a huge relief to a seller to see an offer that doesn't have a financial contingency in it. Number 5 is pre-inspection. So what a lot of buyers are realizing that they need to do is they really want to remove their inspection contingency from their offer. But they want to know the true condition of the home. They want to know the house is solid and that at least if there are problems with it, that they're okay and they're comfortable with it. So they're asking for permission from the seller to do a pre-inspection. And again, this is what allows them to remove that contingency or not ask for the contingency at all with their offer. And it makes their offer a lot more competitive to buyers who are asking for an inspection post-mutual acceptance. And a post-mutual acceptance inspection definitely runs a higher risk to the seller, because based on condition or found condition of the home, the buyer can try to renegotiate with the seller on price or ask that the seller repair something. There's just that opportunity, or the whole deal could flip altogether. But so a seller would much more likely like to accept an offer from a buyer who has done a pre-inspection, even over one that's actually just completely waived inspection, never looked at the house. It runs a little bit of less risk to a seller to choose a buyer who has done their own inspection. Number 6 is preliminary title report. What I recommend doing is reaching out to the listing agent and asking if the seller has ready to review prior to writing an offer a copy of their title report. In this case, it's a preliminary title report. Give you an opportunity to review this before writing an offer. What you're looking for basically is just that the seller has clear title to sell the property, and 2, that you're okay with any encumbrances that run with the title, like if there's an easement across the land for utilities or for access to property behind this said property to a lake or something that another party might have access to. That just to, when you have an opportunity to review that, have the knowledge that exists, and that if you're comfortable with it, you can then write your offer. But what you're really basically doing is by reviewing this ahead of time, is that you're removing any contingency that you would have with your offer to allow you to review this after mutual acceptance with the seller. Again, this is just removing a risk to the seller. That's just a way for you to get out of the deal if you find something in there you don't like. And by reviewing it ahead of time, you're removing that risk to the seller. Number 7 is seller disclosure statement. Now, every seller in the state of Washington is required to provide some type of disclosure of their property. Basically, this is the disclosure of the known condition of the property. So if there are material defects to the property, they need to disclose that to a buyer prior to closing. So what I recommend doing is, if you have the ability to do it, ask the seller to provide you a copy of their seller disclosure statement prior to writing an offer. Again, this is just another contingency like your inspection contingency or your title review contingency that you can have a chance to review first so that you're comfortable with it and you don't need to make your offer contingent on your review of the disclosure. So again, the seller disclosure statement is in the Northwest MLS, it's a 6-page document that has a number of questions that the seller has to basically answer given the condition of the property. It's just an opportunity to review that. If you have questions, you can ask the seller prior to writing an offer. Just again, so that you're comfortable with it and that you will move forward and not make your offer contingent on the review of this document. Number 8 is the removal of your appraisal contingency. If you're mortgaging your loan, your lender is going to require that there be an appraisal on the value of the property. And this is simply because, let's say you're getting an 80-20 loan where you're putting down 20%, the lender is providing you 80%. Really what they're saying is they're going to provide you 80% of the appraisal value of the property, not 80% of the agreed upon price. So what buyers are doing is they're saying, as an advantage over potential other buyers who haven't done this, is they're saying, Mr. Seller, I'm willing to, in the event of a low appraisal, if I'm offering $500,000 for the house and the house actually comes in at $475,000, I'm willing to make up the difference as cash at closing. My loan is going to be based at $475,000 because that's what the appraisal value came in. I'm still going to offer you $500,000 for the house, and I will, in addition to my down payment, based on 20% of $475,000, I will pay the $25,000 difference in cash. Now, certainly there's a risk to this. You need to be able to financially do that, and if you don't have that access to that money or that ability to do it, I certainly wouldn't do this. But if you can and you're able to do that, removing your appraisal contingency as part of your financial contingency is something that buyers are doing to basically stand out over offers that can't do it. Now, again, they're probably not as good as an all-cash offer, but certainly far better than not doing it and having the ability to renegotiate with the seller or attempt to renegotiate with the seller or back out of a transaction altogether because the home didn't appraise. And in this market with multiple offers and escalating prices, you're certainly going to run into an appraisal problem from now on, from time to time. So again, there's just an option. If you have the ability to do it, you might consider it. Number 9 is offering a premium over appraisal value. So let's just say you decide that you didn't want to remove your appraisal contingency altogether. That was just too much of a risk for you. And that's certainly acceptable because it is a risk. But what some buyers are doing as an alternative still to compete with buyers who aren't doing anything, but they still have an appraisal to do, is saying, Mr. Seller, in the event of a low appraisal, I will give you the appraisal price plus a premium, and say a premium of $10,000 or $15,000. So again, using the example of I've offered you $500,000 for the home, the appraisal came in at $475,000. I'm willing to go the appraisal value plus my premium of $10,000. It isn't the $500,000 that you originally agreed with the seller with, but at least it's a premium. And if the seller doesn't have another offer that's either waived appraisal altogether or come in cash and doesn't have an appraisal contingency at all, it's certainly better than somebody who doesn't have it at all. So again, you have to have that ability to do that. You have to have that cash, that $10,000 or $15,000 or whatever amount works for you. Even a few $1,000s is still something better that will make your offer stand out compared to other buyers who aren't doing anything at all. Number 10 is earnest money. Now, in a traditional offer, we've always find that this good faith money, sellers are asking that buyers put down anywhere from 1% to 3% traditionally when purchasing a home. And earnest money really is, like I say, it's a good faith money to the seller that's saying, Mr. Seller, I really like your home, and I'm going to offer up 3% of the purchase price now. We're going to put that into escrow, and should I back out of the transaction for some reason that's not covered under a contingency, I would consider forfeiting that money to you as compensation for taking your home off the market. And what a lot of buyers are doing today is they're really trying to stand out and coming in with solid earnest money. Now you got to remember that at this point, if you're doing some of these other things that buyers are doing, where they've run their loan all the way through underwriting, they've waived all their conditions, they've all the things, they've already done a lot of this work. There isn't a lot of risk left there. I mean, certainly the possibility exists, but most of it's all taken care of. So they're feeling a little more comfortable with maybe coming in as much as 5% down on their earnest money. Now again, it's a risk level to you as the buyer. It's something you have to be comfortable with, but it's certainly something that you can do to show a seller that you're serious about buying the house. Now your earnest money, you've got to remember, no matter how much you put down, and if you do close the purchase, which is what your intent is, that money goes toward your down payment. So if you're putting down 3 to 5%, and you were going to put down 10% as a down payment, you're only having to put down 7 or 5% depending on what you did with your earnest money. So again, it's like you're prepaying your down payment. Now the only risk comes in if for some reason if you decide to back out of the transaction based on something, again, that's not covered under contingency. So it's something you'd be aware of that you were doing. You would be making the decision yourself to do that. So again, buyers are coming in really strong with earnest money to basically just as another way of standing out to a seller to get their offer to look good compared to the rest. Number 11 is non-refundable funds. What some buyers are doing is when they make their earnest money, they're allowing or they're basically giving the seller immediately upon deposit at escrow the ability to say, I'm going to give you, Mr. Seller, say $3,000. You accept my offer. Once we go into mutual acceptance, I'm going to take $3,000 of my earnest money. Let's say I was offering $15,000 overall. I'm going to give you $3,000 today, and this becomes non-refundable. Those funds are for you to use immediately, and if I back out for any reason, even if it's under a contingency, that money is yours. Now, why would I do this as a buyer? Again, this is thinking it through. What is going on in a seller's market, or it's in their mind? And so what's happening is, often sellers are financially strapped at a time when they sell their house. They're doing everything right. They're doing what their agent's asking them to do. They're fixing things prior to listing. They're painting the house. They're spending money on staging. And temporarily, they might be financially strapped. So your offer of $3,000 can alleviate some short-term problems. Sure, they've got money coming down the pipeline 30 or 45 days later at closing, but right now they might still need to make a car payment. They might still need to send their kids to private school or whatever, some type of payment. So by putting that money up as a temporary source of funds, your offer starts to look really, really good if there's any type of urgency for immediate cash. Number 12 is favorable closing dates. Now, this is something that's so simple, and I'm surprised at how few buyers or buyer's agents actually do this. Just simply contact the seller and ask them, in the ideal world, what day would you prefer to close? Or if you're looking for a quick close or an extended close, let me know that. I will write my offer based on the closing date that works best for you. And sometimes if a seller gets down to the reviewing 2 or 3 very, very similar offers, something as simple as that stands out. It says, well, I really need to close on Thursday for whatever reason, or I need to close on the 20th for whatever reason. Again, it's just a very, very simple thing to do, and I'm surprised at how few people do it. People are more focused on what works best for them as a buyer, what day their lease runs out, or what day they need to be out of their apartment, or whatever. But focus on what the seller's needs are. Ask them specifically what day works best for you to close. Number 13 is short-term rent back. A lot of buyers are starting to figure out that sellers are also buyers themselves. And even though they can sell their house in a matter of hours in this market if they needed to, the reality is, as buyers, they're struggling and they're going through the same problems that you're going through and competing with other buyers. And so what some buyers are smartly figuring out, that what I think I could do to really help this seller's situation is, it says, Mr. Seller, if you accept my offer, and I will close on whatever day you want to close on, but once we close, I am going to rent back your house to you up to 60 days. And what this will do, hopefully, especially if the seller is strapped to find another house, gives an opportunity to have, again, additional time to purchase the home they want, go through the escrow process and close, and hopefully avoid having to move twice. This would be a huge relief to a lot of sellers, just knowing they have this comfort, this cushion of time, that otherwise they don't have to be out of their house in 30 days, make a quick decision on another purchase, or possibly move into a short-term rental somewhere else. It's just a huge relief to them. Again, all of these ideas are about making your offer the least risk and the most comfortable to the seller. Number 14 is the new love letter. Many buyers have learned the tricks of writing what we agents like to call love letters to a seller saying how much they love their home. But in today's high-tech market, especially here in Seattle, love letters are starting to become love letter videos, and buyers are reaching out to sellers through video, shooting their own 1 minute, maybe 1.5 minute introduction to the seller, explaining who they are, where they come from, why they like their home, why they like the neighborhood, all the things that you would put in a letter. It's just done in video format. As a listing agent, I find it fascinating when I get these. The sellers seem to really like them, and it's just something you can put it up onto YouTube, put it in a private setting so that only the seller can take a look at it through a link that's provided to them. So again, this is something, just one more thing to stand out in the eyes of a seller, hopefully make some type of connection with you, and make your offer a little more personable to them. And it's something, again, it's just not always about money. Sometimes it's just about connecting with the right people, knowing that somebody really, really likes their home and was going to appreciate living in the house that they've taken care of for years. So once again, the 14 tips that I have for you on how to buy in a hot seller's market. Number one is to be financially ready. I can't stress this enough. It does surprise me every once in a while how that a buyer comes to me ready to purchase and they don't have any type of financing set aside or ready to go. Number two is loan type. This is just about what appeals most to a seller. That a traditional conventional loan is the least risk and the least expensive to a seller, and that's probably something they're going to look at. Number three is if you can shorten your loan approval process time, ask your lender to run your loan all the way through underwriting. This will give you an advantage over any buyer who hasn't done that. It's about removing risk to the seller. Number four, cash is king. If you have the ability to pay cash, certainly consider doing so. You will certainly stand out to a seller by being able to remove your financial contingency. Again, it can be risky if you're borrowing money from family members and friends, but it's certainly an option there that if you can do that, great. Number five, pre-inspection. I highly recommend to be competitive, to have the home pre-inspected. Again, this allows you the opportunity to have the knowledge of the condition of the home, but not make your offer contingent on the inspection. Number five, preliminary title report. Again, it's the same thing as like a pre-inspection. You're just reviewing this data, this information prior to writing an offer. You would always have the ability to have this information if the seller has it available before you write. Great, get your opportunity to review it and just not make your offer contingent on this the review of this information. The same thing with number seven, the seller disclosure statement. Ask the seller if they've got one available and if you could take a look at it prior to writing an offer. Again, you get the opportunity to have all the knowledge and know the condition of the home. You're just not making your offer contingent on your ability to review this information, and you don't need to because you've already done it. Number eight is removing your appraisal contingency. This can be a little risky, but certainly buyers are doing this and looking for ways to be more competitive. Again, this is only if you have the cash ability to be able to do this, and what I even recommend it. If you don't, certainly don't go this route. Number nine, offering a premium over appraisal value. So if you can't waive your appraisal or don't want to, and that would be completely understandable, what you might still be able to do to stand out in the eyes of a seller is to offer a little bit of a premium over the appraisal value. And this will give the seller some type of relief that if in the event of a low appraisal, and that's becoming less of a problem in today's market. Appraisers are catching up to the escalating prices that we have in the Seattle market. But by offering a premium, at least you stand out over all the buyers who are not doing anything like that at all. Number 10 is coming in strong with earnest money. Traditionally, offers come in at about 1 to 3% of the purchase price. If you can come in a little stronger than that, you will certainly stand out among other buyers. Number 11 is offering up some non-refundable funds. And this simply is going to the seller and saying that I'm willing to, if you accept my offer, make part of my earnest money non-refundable. And you can use that money as cash today. And I certainly have, if I back out for any reason, I have no access to the money. It's kind of non-refundable, and it's not even really part of my earnest money anymore. Number 12 is choosing a favorable closing date to the seller. This is a very simple thing you can do, and so rare do people actually do it. They're so focused on when they like to close, they don't really ask the seller what date works best for them. Number 13 is the considering a short-term rent back. This will certainly make a seller's life a little easier especially if they're a buyer in today's market looking for a home and they haven't found that home yet. Give them some breathing room to purchase a home, to go through closing and hopefully be able to move before those 60 days are up. And a rent back can be offered anytime. Just you're the owner of the house and they've become a very, very short-term tenant, a tenant that will probably take very good care of the house because they've lived there for a number of years and they know the house well. So I don't think there's much of a risk of taking them on as a short-term tenant. And number 14 is the new love letter, simply providing a quick video to the seller instead of writing out a letter. I think it's just the uniqueness of it is standing out at least certainly getting looked at and making it so that your offer might jump to the top of the stack, at least someone they might consider. So again, these are 14 great ideas that I think would work for you if you consider them. You certainly don't need to use all 14 of them, but you might consider using some of them to improve your offer. And thank you. I hope you found this information useful. There are additional videos you can find on either YouTube or Facebook under the name Seattle Real Estate 101. And if you have a very specific question, feel free to contact me with that question. Happy to answer it, whether you're purchasing a home or selling. I'm always happy to answer any questions that you might have. And with that, again, my name is David Warren. I'm a local real estate agent helping buyers and sellers for over a decade right here in Seattle. Thanks.